With a career spanning over 2 decades, Relli brings to the table a wealth of experience in banking, wealth management and financial services. Previously, he has worked with the ICICI Bank and Centurion Bank of Punjab. Relli is a qualified chartered accountant and has also studied at the prestigious Indian Institute of Management, Bangalore. The overall response of the public to the mainboard IPOs of the year has been very good. India's primary market witnessed highest fundraising in FY18. The financial year saw companies raise 82,109 crore rupees through 45 IPOs, against 25 IPOs raising 28,225 crore rupees in FY17. In the SME segment too, the number of companies raising money from the market increased from 80 in FY17 to 155 in FY18. The total value raised has gone up by 172% to 2,247 crore rupees. FY18 was the best year ever for the IPO market, the previous high being in FY08 when 41,323 crore rupees had been raised, about half the amount raised in FY18. The aim of many IPOs in recent months has been to give early investors an option to exit. Some have been fairly successful, unlike in the past, when the market was wary of companies that witnessed exit of early investors. The Indian IPO market has matured, one sign of which is the reduced resistance to secondary offerings, issues in which no fresh money is being raised. PE, VC investors sold or reduced holdings in 17 of the 45 IPOs. Offers for sale by such PE, VC investors totaling 10,831 crore rupees accounted for 13% of the total IPO fundraising. Offers for sale by promoters at 52,340 crore rupees accounted for 64% of IPO fundraising. Investors are looking for companies with quality and healthy growth prospects. Whether it is a primary or secondary offering is less important now. The market is still ready to pay a premium if it feels a company will deliver high growth. It is a liquidity-driven market. Mutual funds are finding it difficult to buy quality stocks from the secondary market, as they are fairly highly valued. Hence, they are willing to subscribe to IPOs of companies even at seemingly high valuations, where they see good growth prospects. They are also getting large allotments of anchor and QIB allocations, as buying large quantities from the secondary market could have an impact cost. FIIs have also taken to subscribing to IPOs in a large way in FY18, with 42.6% of March 2018 inflows being invested in the primary market. This is one reason why IPO valuations have been high this year. While private insurance companies behave like mutual funds while subscribing to IPOs, PSU insurers at times play the role of supporting, bailing out PSU IPOs, when the response for the same has been lukewarm. Let's take the example of Hindustan Aeronautics IPO. It was subscribed 0.99 times, and LIC subscribed to 140% of the QIB portion, which was 69% of the IPO size. According to Prime Database, the overall response of the public to the mainboard IPOs of the year has been very good. While 17 IPOs received a tremendously positive response and were oversubscribed more than 10 times, 8 others were oversubscribed more than 3 times. The remaining 14 IPOs were oversubscribed between 1 to 3 times. Some of the smaller IPOs have seen strong non-institutional investor interest, with subscription in this category crossing 100 times. The NI category was heavily oversubscribed in the case of Apollo Micro, 958 times, Capacit Infra Projects, 638 times, Amber Enterprises, 519 times, Astron Paper, 397 times, and Moss Financial, 379 times. Of the 38 IPOs that got listed, 17 gave over 10% returns, based on the closing price on the date of listing. Salazar Techno Engineering gave a stupendous return of 152%, followed by Astron Paper. Investors want listing gains, and they have Avenue Supermarts and Jubilant Foodworks as benchmarks. Average first-day listing gains of all IPOs in FY18 have been 19.7%. There has been a record opening of Demat accounts in India this financial year, as individual investors, impacted by a sluggish real estate market and softer interest rates, looked to invest in equities. About 3.76 million fresh Demat accounts have been opened in FY18 until Feb, surpassing the previous record of 3 million in 2007-08, the peak of the previous bull market. Household savings are increasingly shifting from physical assets to financial assets, post-demonetization. A string of successful IPOs, a sharp rally in stocks, the ease of opening Demat and broking accounts, and feasibility of interface with easy access to data are some reasons for many new investors to enter the equity route directly. IPOs remain the best and safest initial step for first-time investors. All is not well, though. Recently, an IPO of the largest broking company became the second big primary offering, which failed to generate adequate investor interest after Hindustan Aeronautics was rescued by LIC. HNIs and retail investors look for listing gains in IPOs. However, with subdued market conditions, recent debutantes have given poor listing gains, denting investors' interest. Some recent IPOs like those at Bharat Dynamics, which listed at a 15.89% discount, HG Infra, no listing gains, and Aster DM Healthcare, 4.16% discount, have disappointed the investor community. Almost 2 of every 5 IPOs in FY18 are now trading below issue prices. Unlike in the past, fund utilization in the case of most IPOs does not imply addition of fresh capacities. Hence, the impact of these IPOs on manufacturing, services growth and the GDP is minimal. Another reason for floundering investor interest could be the pricing of issues, which has often been at high valuations. It has been witnessed in the past that during a bullish market, companies tend to aggressively price IPOs, leaving nothing on the table for investors. Disclaimer: the opinions expressed in this column are that of the writer. The facts and opinions expressed here do not reflect the views of www.economictimes.com.